Good morning, and welcome to today's episode of the Market Snapshot. Uh, I'm going to be taking you in the place for Samson, who is currently on leave and is unavailable to be with us today. I hope you're all having a pleasant morning, and let's start the snapshot. Yeah, so I just want to quickly go through what's happening generally as of today morning in the markets. So yesterday we had Jerome Powell speaking, and of course the major comments we got from Powell were hawkish comments. He indicated something about the rates not convincingly being sufficiently high. That of course pointed towards the possibility of the Fed doing more hikes. We also had the 30-year bond auction, which disappointed, and we saw a decline on the auction rate from about 4.8%. It declined to about 4.7%. And the sharp spike we saw down on the stocks yesterday was majorly caused by this 30-year bond auction. The bid to cover ratio also declined, which meant that those bonds that were actually exchanged or sold at the auction, there was a decline from the previous auction. So that provided a bit of a downside to the stocks, and also caused some downside also for the other G10 currencies like the pound, as well as also the euro, and of course the AUD. So as of this morning, we are seeing some relative strength coming in for the we are seeing some relative strength coming in for the dollar, and that of course is premised by that auction, but also the comments that came in from Powell. So of course, Powell did not really say a lot. All he's indicated to was that the inflation was still elevated, and that of course they are majorly focusing on bringing it down to the Fed target of 2%. So we have also gotten some data that has come in for Q3, as well as quarterly, yearly GDP data for the UK, which of course came in. I would say it was sort of like hot and cold. We saw some data that came in higher. That was for the GDP Q3 year over year. It increased from 0.5% to about 0.6%. We also saw the GDP year over year data also increased from 0.5 to about 1.3%. So there's some relative strength there for the pound, and we are seeing it slightly moving higher. And of course, that's because the data seems to indicate that a recession has been postponed for the UK, possibly indicating that there's a bit of strength and resilience there. However, there is still some indications from the Eurozone. Of course, basing on the data that we got from the Eurozone for the previous months, we have been seeing that GDP data has actually been declining, which could indicate that there's some sort of slowdown there. So the other news that we also got yesterday was that there was a ransomware attack at the Industrial and Commercial Bank of China Limited. So if you come and see here, this news hit during the US session. There wasn't that much of a reaction to it, only that we saw, especially on the US indices, we saw some reaction there where we saw the indices actually selling a bit. And of course, we are yet to see how this plays out over the course of the day. And of course, these ransomware attacks are not new. We've been seeing them happening. I remember there's a company, I think Maersk, I don't know whether it was Maersk or one of these shipping companies, which of course were actually gotten involved with this ransomware. So of course, if you go through the article, you will see that the Industrial and Commercial Bank of China's arm was hit by a ransomware attack that disrupted trades in the US Treasury on Thursday, the latest in a string of victims ransom demanding hackers. So what happens with a ransomware attack is usually it will lock your activities until you know pay a certain amount of funds. Usually, unless you pay those funds, you will not be able to access your facility or be able to access whatever it is that you're trying to do. So, of course, they're saying here that hackers lock up a victim. Of course, that's what I've explained to you. So, if you go through, you see that we don't often see a bank this large get hit with a disruptive of a ransomware attack, said Alan Liska, a ransomware expert at the cybersecurity firm Recorded Future. Liska, who also believes Lockbit was behind the hack, said ransomware gangs may not name and shame their victims when they are negotiating with them on their ransom demand. So coming quickly to look at the CME FedWatch tool, we can see that there isn't that much change from yesterday's comments by Powell. We are seeing that the December meeting, which is scheduled for the 13th of December, is still indicating that the Fed is likely to keep their rates on hold within the target range of 5.25 to 5.5. And of course, this rate probability is as high as 90.7% as compared to 9.3% for an increase to 5.75 in another target range of 5.5 to 5.7. So this, of course, is seen as USD bearish, and we could see the dollar possibly weakening ahead. We're yet to see how the markets have digested Powell's comments, but as of Euro session, there seems to be some relative strength for some of these different currencies. They are recovering a little bit. We're also seeing some recovery coming in for the US indices as well as also for the Euro indices. So I think maybe during the US session, we might see some bit of reaction there that will guide us on how the day is going to end. So before we go to the charts, let's just see whether we have any other news that is coming in from the markets. We are seeing Kiwi dollar ticks up, but points to losses weekly. Of course, the New Zealand dollar has been fairly the New Zealand dollar has been fairly weak. The reason for that has majorly been because of the data that we have been getting from Asia. China has been indicating towards issues of disinflation. We are seeing a general slowdown on some of these economies, which of course is providing some downside risk to the currencies. The Japanese yen, of course, weakened yesterday. We saw it rising as high as 151. And of course, some of the different banks like JP Morgan and Morgan Stanley have been pointing towards higher rates for the currency pair of USD/JPY. And of course, we should see how this plays out over the next few weeks. So if you read through here, it's saying that earlier this week, Fed Chair Jerome Powell hinted at the possibility of further interest rate hikes to tame inflation. Meanwhile, the Bank of Japan Governor Kazuo Ueda said the central bank should tread carefully as uncertainties abound. He also acknowledged that widening policy divergence led to the currency's weakness, but made no direct pronouncements in support of the yen. Earlier this month, the BOJ kept its policy rate steady at negative 0.1% and maintained the 10-year Japanese government bond yield target at 0%, while making small adjustments to yield curve control policy. We're also seeing some general weakness also for the Australian dollar. And of course, this is also premised by some of the comments we got from the Reserve Bank of Australia that have also hinted on issues of economic slowdown. And of course, that is also having an impact on the currency. So that's generally what we're having today. Of course, gold is still fairly weak. The reason for that has been the easing off of the Middle East tensions. However, we are not yet certain of what's going to come out of the Middle East. We are seeing that the latest we got from the White House was that they could look at technical pauses, but they are not calling the technical pauses, they're not calling them ceasefire, or they're not hinting towards a ceasefire, which means the conflict might be still fully active. However, some of the other efforts have been made by the UN and also by the French President Macron, who has advised that the solution to this conflict could be a two-state solution where they get a coalition government, partly Palestinian and partly Israeli. So I'm thinking if we get moved towards that, we should see gold maybe weakening further. The other thing, of course, is we have not yet checked how the COT is doing to check and show us how the gold positioning is in the market. It's always important to check on how the COT is because it usually provides some guidance on where gold could possibly go. So, of course, if we check the latest data we got, that is from as of the week of 31st of October, we are saying that generally there has been a build-up in short positions. Of course, this is by the producer, stroke merchants, stroke processor, and stroke user. We're also seeing that there was also a build-up in the short positions by the swap dealers. We had a build-up of positions by about 10,855. However, we're also seeing that the long positions are still fairly building up here with non-reportables. And we saw also that there was a very big cut on other reportables here, which is likely also the explanation as to why we saw gold selling into this week. Could be that there was a big drop on those that were holding long positions. So for now, we have to just keep waiting to see what comes out of some of those key catalysts, like the war, but also how the DXY does. So quickly, let's go to the charts. But before we go to the charts, I think let's just see what we have on the calendar today. So we've just gotten some data coming out for GDP for the UK, which is yet to have that much of an impact on the pound. I'm not seeing that much movement on the pound as of this, the pound dollar. We could maybe see some volume kicking in, possibly mid-EU session. But of course, moving much further lower into the calendar, we have some data coming in from the Michigan inflation expectations, as well as also the Michigan consumer sentiment. So this data is going to come out at 6 p.m., which is about 1 hour and 30 minutes after the start of the US session. And the US economy has been fairly strong based on the data we have been getting. I'm expecting that if we continue to get lower inflation expectation targets, that will, of course, help the indices to buy a bit more. And of course, if we get strong consumer sentiment, that should be bullish for the dollar. So I think that's it for Friday. Friday, of course, is usually relatively a quiet day in the market, given the fact that we do not have any high impact news like NFP or some of these other economic releases. We shouldn't expect to see a lot of strength there. So yesterday we saw a very big spike lower on the risk on assets like the pound dollar, the indices, as well as also gold. The reason for that was because of the 30-year auction yield, the 30-year auction, which spiked the 30-year bond yield to about 4.8%. So let me just show you that quickly. So when you go to your trading view, you just check here on we'll just go to the 30-year bond so that we can see what it's looking like right now. So yesterday we got a spike. This spike came during the 30-year bond auction in the US, where we saw it moving all the way to 4.8%. So this spike which we saw is actually the reason why we saw is one of the reasons why we saw the pound and the euro. Same thing also for the indices selling. The Dow, of course, the US 30 roll on FXPesa platform, it spiked lower. And the reason for that was initially because it was a relatively bearish day during the US session yesterday. And that was, of course, because there wasn't that much buying momentum. But however, this intensified that spike. So this, of course, was during the bond auction. And we saw that after the bond auction declined from 4.8 to 4, they got a rate of 4.7%, but also the bid to cover, which usually shows us how much bonds have actually been exchanged. we saw that that bid to cover actually declined, and that's the reason why we saw that pound and euro actually recovering as of today. So we are yet to monitor and see what happens after, especially during the US session. So when we come to the charts, on the charts, we are going to start with GBP USD. So if you check on GBP USD, you'll be able to see that there's some sort of a descending wedge which is currently being formed on a H1 time frame. And of course, this descending wedge clearly marks those points where we saw a decline. During yesterday's US session, we saw that the pound dollar failed to hold this level here, where we saw some bit of buy side liquidity. And immediately we fell below it. We saw that the GBP USD initially bought, and then after we saw it selling quite heavily. So right now it's still stuck in some sort of deadlock, but I'm expecting that if we have a retest of this level here and we fail to maintain momentum above it, we should see the GBP USD selling. Now, of course, given the fact that the GDP data we got as of this morning does not seem too much on the down, it doesn't seem so much as a bearish for the pound, simply because yes, we saw a slight decline. It isn't seen as much of as a deterrent for an upside move. So depending on how the DXY performs, given its inherent strength as of Euro session, we should see that providing some downside risk for the GBP USD. But for now, we have to keep monitoring it to see how it plays out. Now, when you zoom in a bit, you'll be able to see that we have actually breached the 200-day moving average, which is a simple indication that we could see some further weakness coming in for the pound. But for now, those of you that are trading it, you might observe a bit of choppiness on it. And of course, we need some fresh volume to come in to provide some upside moves or downside moves for it, possibly during the mid-Euro session or during the US session. So quickly going to the NASDAQ, NASDAQ created a bit of a box, a Davos box, which are somewhere around here. We saw NASDAQ rising quite sharply higher, but immediately it moved higher. We saw that it actually failed to sustain that move higher, and immediately breached this zone here. So I'm really waiting to see how NASDAQ actually performs within this area here. If we see any movement, possibly below this box, then we should see the NASDAQ selling much more further. That could enable it to test new levels to the downside. So for now, we just have to keep monitoring it. Now, one of the reasons why we have been seeing NASDAQ fairly strong has been because the inflation expectations in the US have been that inflation is going to keep declining. And of course, we're also seeing that the strong earnings that came in for some of the tech companies are supporting it. This, of course, is not for all of them, just a few of them. We know that Apple provided a profit warning for Q4 in light of their, declining, Greater China revenue. But I'm expecting that that NASDAQ might, come and retest this level here. If we get a retest of this zone, then we are going to break lower. But for now, we have to keep monitoring there. Now, this box that I've drawn here, we saw that NASDAQ actually broke below it, and if we get up, if we come and retest this zone here, then of course I'm thinking that we're going to have NASDAQ selling below and possibly going back towards its 200-day moving average. Going over to the Dow. So the Dow, of course, as of this morning, Dow has actually made an attempt to move back higher. And that, of course, is because the DXY has sort of like cooled off a little bit from yesterday's auction movement higher. But I'm expecting that we should see how the Dow performs around this level here. If we see it breaking below this ascending trend line, then we could see the Dow possibly selling and moving much lower. So for now, let's just keep monitoring it and see how it performs. So crossing over to gold. Gold has been on a decline since, of course, when we last met on Wednesday, I indicated to you that gold was actually printing a lot of bearish flags, which are usually used for us to look for sell entries on assets. As you can see here, we saw gold created a very big bearish flag, which it broke. And immediately after it broke below the bearish flag, we saw a very nice death cross, where we saw the 200-day moving average crossing above the 50-day moving average. And ever since we had that cross, we have seen gold on a decline. Right now, gold has made some sort of a descending wedge. So I'm expecting that we're going to have a break above this descending trend line. If we manage to get a break above it, gold will attempt to reach this buy side area here. If we get a retest of this zone, then gold could undergo some bit of buying. However, some of the downside risks for gold are going to emanate from an escalation, rather a movement from a technical pause to potentially a ceasefire, which is something that I don't envision happening anytime soon. So given the fact that the DXY has also been showing some strength, we should see that pressure gold possibly back to this level here, where we have this descending trend line. So crossing over to Euro USD, Euro USD has been on a rising trend on the H1, as you can see. However, it seemed to have failed to sustain a breach above the upper part of this ascending trend line. And of course, this breach that we had around this zone here happened on Monday. And ever since we had that breach, Euro USD has been on a downtrend. So we just have to keep monitoring to see how Euro USD performs. But I'm expecting that we should have some bit of weakness, given the fact that the DXY has woken up, especially after yesterday's auction. If, however, we attempt to break or breach this sell side level here, we should see Euro USD potentially selling back and breaking below this channel. So this channel is actually quite it's actually quite reliable, since it takes us all the way back to September. So how it performs within here should enable us to see how it does. Now, of course, on the other flip side, keep in mind that we're also going towards the end of the year, and that usually provides some upside move for some of these risk-on assets. Euro USD, pound dollar usually benefit during times like this. So we need to see how it performs within this zone. So we might get some movements like this, possibly over the next few weeks. And this movements are largely going to depend on how the dollar performs. Of course, the other thing is, of course, we have to see how the markets price in Powell's comments. We know that by far and large, the comments from the previous FOMC conference were not, were not seen as USD bullish. And of course, that has allowed the euro to benefit. So I'm thinking we need to monitor and see how it performs. If we get any kind of weakness, then that will allow some of these currencies to benefit potentially to the upside. So I think that's it for today. Unless we have any comments, I think we can call it a day. So let me just check here if we have any comments. So let's see. So Lakenis, you're saying hello. Hello, Lakenis. I hope you're doing great, and I hope you're having an awesome time. Maina Wangui, you're saying hello. Hi, I hope you're having a great time over there. Ibrahim, hi, I hope you're having a great time. Okay. So I don't think we have any questions. I think that will be it for today. I wish you all an amazing trading day. Okay, someone is asking about USD CHF. So let's check out USD CHF quickly, and then we can call it a day. So for USD CHF, it's benefited, I think, strongly from yesterday's move higher by the DXY. But I'm expecting we should see some relative strength, given the fact that that the DXY has actually been performing quite strongly of late. It seems also to have made a bit of a comeback from the FOMC conference that was actually USD bearish. So for now, I think we just have to keep monitoring it. Now on the H1 time frame, there seems to be a bit of a structure forming where we're having higher lows. And of course, you can see these are actually quite many here. The latest one we have is actually this one here. So if we get a movement possibly breaking this level here, we should see a retest of this level, which should happen maybe sometime today. But this is majorly going to depend on how the DXY performs. So if, of course, we do not manage to retest this zone, the structure will definitely break to the downside, which could enable us to retest this level here, where we previously saw around the 9th of November. So for now, let's just keep monitoring the DXY. I expect if you're trading USD CHF, that is a Brian Miller, you should be looking at how the DXY does, because that usually will show you, you know, a bit of strength, usually for this particular currency. So keep monitoring it. For now, that's what I can, you know, provide you guidance on. I hope that has helped you. I wish you all an amazing day, guys, and have a lovely weekend. I will see you all next time for the next episode of the Snapshot. Have an awesome day, guys, and cheers. Lovely weekend.